Assalamualaikum. How to get pre-approved for mortgage. Everything that home buyer needs to get pre-approved for a mortgage loan. As you search for a home, getting pre-approved for a mortgage can be an important step to take. Consulting with a lender and obtaining a pre-approval letter provides you with the opportunity to discuss loan option and budgeting with the lender. This step can serve to clarify your total house hunting budget and mostly mortgage payment that you can afford. As a borrower, it's important to know that what a mortgage pre-approval does and does not do, and how to boost your chances to get the approval. With several lenders allow to home buyer to shop mortgage rates and find the best deal. A seller often want to see mortgage pre-approval letter and in some cases proof of funds to show that a buyer is serious. The first step is filling out a mortgage application and supplying your social security number so that the lender can do a credit check on you. You will also need to provide extensive documentation of job history, assets and liabilities, income tax returns, and more. Self employed buyers may be to provide additional documentation. After reviewing your application, a lender will offer pre approval with condition or deny pre approval. Pre approval is physical exam for your finance before lender decide to pre approve you for a mortgage. They will look at several key factors: debt to income ratio, loan to value ratio, credit history, FICO score, income, employment history. Think of a mortgage pre approval as a physical exam for your finance. Lenders will likely poke and prod into the corner of your financial life as a way of trying to ensure that you will repay your mortgage. Pre qualification versus pre approval. You have likely heard to the term pre qualification used to interchangeably with pre approval, but they are not same. With a pre qualification, you provide an overview of your finance, income, and debt of a mortgage lender. The mortgage lender then gives you an estimate loan amount. In this way, a mortgage pre qualification can be useful as an estimate of how much can afford to spend on a home. However, the lender does not pull your credit report or verify your financial information. According to pre-qualification is a helpful starting point to determine what you can afford but carries no weight when you make offers. On the other hand, a pre-approval involves filling out the mortgage application and providing your social security number so that a lender can do a hard credit check. A hard credit check is a triggered when you apply for a mortgage. For this process, a lender pulls your credit report and credit score to assess your credit worthiness before deciding to lend your money. These checks are recorded on your credit report and can impact your credit score. By contrast, a soft credit check occurs when you pull your credit yourself or when a credit card company or lender pre-approves you for an offer without you asking. Soft credit checks do not impact your credit score. Also, you will list all of your bank account information, assets, debts, income and employment history, past addresses, and other critical details for a lender to verify. The reasons for this that above are lenders wants to ensure that you can repay your loan. Lender also use the provided information to calculate your DTI ratio and loan to value ratio, which are essential factor in determining the interest rate and ideal loan type. All of this makes a pre-approval much more valuable than a pre-qualification. It means that a lender has checked your credit and verified the documentation to approve a specific loan amount. Final loan approval occur when you have a appraisal done and the loan is applied to a property. When to get a pre-approval. Mortgage pre-approval letters are typically valid for 60 to 90 days. Lender put an expiration date to these letters because your finance and credit profile could change. When a pre-approval expires, you will have to fill out a new mortgage application and submit update paperwork to get another one. If you are just starting to think about buying home and suspect that you might have some difficulty getting mortgage, going through the pre-approval process can help you identify credit issues and potentially give you time to address them. Seeking pre-approval 6 months to 1 year in advance of a serious home search puts you in a stronger position to improve your overall credit profile. You will also see have more time to save money to down payment and closing costs. When you are ready to make offers, a seller often wants to see a mortgage pre-approval and in some cases proof of funds to show that you are a serious buyer. In many housing markets, sellers have an advantage because of intense buyer demand and a limited number of homes for sale. They may be less likely to consider offers without pre-approval letters. The pre-approval process applying for a mortgage can exciting, nerve-wracking and confusing. Some online lenders can approve you within hours, while other lenders can take several days. The timeline depends on the lenders and the complexity of your finance. For starters, you will fill out a mortgage application. You will include your identification information as well as your social security number so that the lender can pull your credit. Although mortgage credit check you count as a hard inquiry on your credit reports, you may impact on your credit score. Here's sample of a uniform mortgage application. If you are applying with the spouse of other co-borrowers whose income you need to qualify for the mortgage. Both application will need to list financial and employment information. There are 8 main sections of a mortgage application: type of mortgage and terms of loan, the specific loan product for which you are applying, the loan amount, terms such as length to time to repay the loan, amortization and the interest rate, property information and purpose of a loan, borrower information, employment information, monthly income and combined housing expense, asset and liabilities, details of transaction, declaration, what happened next, documentation needs, okay, down payment gifts, and factor impacting pre-approval, DTI ratio, etc., credit history score, LTV ratio, all things are included in there.